Over. Hey, Andy and Jamie, what's going on this Thursday?
Hey, Scott. Thank you, buddy. Hi, Jamie. How are you, man?
Andy, I'm good, buddy. How are you?
Oh man, doing good. Good. I'm ready for a long here. I was eyes off, but boy, they're lined up. Thank you so much, everybody, for joining us today. This is the Trading Studio. My name is Andy, and I am joined with Jamie there. And we are going to kind of talk about, well, we're going to talk about a lot of stuff today. I won't keep you long because I know people want to go ahead and get started for the long weekend, but let's dive into the disclaimer and get that out of the way, and then we'll dive into the rest of the stuff. All right, we are content publishers, okay? What we're doing today is for educational purposes only. We're going to show you cool software, talk about and demonstrate some really cool stuff that it does, but nothing that you see and hear today should be construed as investment advice, okay? That's not our job here. But we will be talking about some stocks and some potential entries and things like that, but just keep that in the back of your mind. Okay, we are not licensed brokers or RIAs or anything like that. That's who you want to seek out if you are looking for investment advice. All right, I want to talk about, I know we got some new people in here on the 5-star support education and training that we have here at Trade Ideas, okay? It all starts in the trader's narrator, and not only that, he's a really good professional trader. It's free for everyone. You do not have to be a TI subscriber. We think that you will once you see all the people using the software in there and finding opportunity. But you don't have to be to join, so just get in there. And traders, I can't think of a better place to be. You know, get in that trading room, spend some time in there listening to veteran traders. There's a lot of them in there besides Barry, and you can learn a lot just looking over somebody's shoulder and listening. And then I shouldn't say every, Monday through Thursday at 5 Eastern time, the same time slot, we got an array of webinars, and it's usually myself, Jamie, or Steve paired up in twos and handling those. But on Wednesday, you can see our CEO and our CTO, Brad Williams. It's a great place to come for a demo of the product and see the new bells and whistles that are be coming out soon. And it's a great place to ask questions and get some answers from the brainchild, the children, I should say, at Trade Ideas. Them and a few others, I should say. And anyway, guys, another thing we started about a month ago is our support webinars. Guys, this is every day, Monday through Friday at 12 Eastern, okay? If you are new to the product, or even if you're thinking about subscribing and you want to learn more, that's a great place to come and ask questions. And we are getting more and more people in there, but not as many as we would like as far as those looking for support, because that's what we created this for you to come in and ask questions, and we can demonstrate for you and show you, you know, things that you need to know to, you know, to work the software properly so you can benefit in the marketplace. All right, and another way to benefit in the marketplace is by simulated trading, okay? Some people call it paper trading. We have a great interface to do that on now. It's called Brokerage Plus. It is, it's a great way to test your skills, your portfolio management. There's different ways to use it. It doesn't matter if you're day trading, swing trading, whatever you're doing. You need to paper trade, especially if you're new to trading. You need to do it for several months, okay? I get amazed by the number of people that think they can just come in and just start trading and just instantly start making money. You have to treat this like a business, and there's no business you can just jump in right away and start. It's very rare anyway. You know, the ones I've been involved with usually lose money the first few months. Trading is not different, you know, and you need to apply, you know, a lot of time, and a lot of that time needs to be paper trading. That's how you're going to learn to really, you know, before you make the dive into real money trading. You do not need a broker. Everything's done on our interface, okay? So no broker connection is required, and you do not need to fund an account, okay? Just have a subscription with Trade Ideas. You can do all the paper trading you want. All right, let's take a look. I shouldn't have done that. I can just click on this real quick, and we'll take a look at the agenda for today. All right, we're going to go over the market recap. I'll have some interesting ideas of what I'm going to be looking at in the days ahead. Holly recap. Jamie's going to take it over there. There were a few good trades there in Holly today. Jamie will highlight those. And then I had something I dug up that I haven't had out in a while, is what's called a 50 and 200 day SMA alert. And it's just a simple alert that will let you know when stocks are crossing these important moving averages. I like to use this a lot when you start getting extremes in the market. These can be great little fading little instruments, and I'll show you that, and I'll share that with you so you can have access to it. And then we're going to build another alert, and this has kind of been my theme over the last 3 weeks, because when you get in these wild markets, okay, through my experience and the good traders that I know, the ones that really profit in a market like this is not chasing momentum. I mean, you can find it out there, but boy, when you hit the right fade and the right entry on a fade, you can really hit it big. So we're going to build an alert, and this is a great way to you see how you can use Trade Ideas to build pretty much whatever you're looking for. So we're gonna experiment around with that today. All right, let me back out of this real quick, and we will pull up the SPYs. Bear with me. I'm going to pull up my little Epic pen too so I can draw some stuff for you. I should have this already open, but I'm sorry I don't. There we are. And we have had a nice big bounce. I know there's a lot of bears getting run over. I hear them arguing all the time on Twitter, and that what is going on here? Well, moving averages can get kind of along with moving averages. See, we've had a nice bounce off these lows, 218 to 278. What is that, 60 points? And it's going to peter out, and then you're probably would be thinking, right, okay, when you have looking at here, we're bouncing today was pretty much a spin. I want to show you, and I'm going to marry it up with all this here. Okay, this basically resistance level was formed on a pullback, basically, what is that, August, and we tested this level several, and we are potentially headed, kind of watching the 284 level if we get there. And not only that, we do this resistance level and at the same time be beating moving average. Jamie, be sure to
yeah, we're all good right now.
Say we have a quiet week and we run into that level. This is the area I'm going to be level. Like I said, when you get this kind of volatility, you cannot just draw lines in the sand. Okay, they are going to bounce, through in these levels a little bit, but that's the area I'm going to be watching on Friday. But, index versus the Qs, because the Qs have about 5 or 6 stocks in them that make up about 50% of the weighting, which is huge. Okay, so you get things like Apple, Amazon, Facebook, Google performing well, they're going to have a big impact. So you could have those 5 just doing incredible, and the other ones, just kind of meandering down, much lower on their daily chart, but you're still going to get the, the upward movement in the Q because they have such an impact. Horizontal line, and you can see, yeah, this could be a pivot level right here, where we're going to kind of areas over here. So I don't like to split years. As far as potential fade to the overall market recap?
Nope.
Yeah, we will. I mean, it's resiliency to just have these huge bounces. And, I hesitate to say this because I know the Fed has our back and they're throwing the kitchen sink at this market, full of money. So it's one of those things where I just don't think the long-term impact of this shutdown that we've had is really indicative of the price action we're seeing. But like I said, when the Fed has your back and throwing trillions of dollars at it, it's, I don't know. We'll see. All right, Jamie, I'm going to turn it over to you, and we will go over some Holly real quick. And you want to grab it, or you want me to throw it to you?
I'll grab it here.
All right. All right.
Yeah, and with this crazy type of market that we're in, not so much in this rapidly declining and this area that Andy was recently analyzing here. So not only is it a little bit more difficult for us human traders to navigate, statistical systems and other types of algo trading systems too, it's harder for them to find some alpha, so to speak. Now, Holly today, let's see here, we had 13 signals. If we focus our attention over here on the toolbar, we had 5 signals out of 1.0, 4 out of 2.0, and 4 out of Neo. So pretty even across the board as far as signals go. Neo didn't really perform that much today, finished the day down a smidge. And these figures that you're seeing over here based on 100 shares per trade. So 400 shares in, 400 shares out, left with a negative $8.50. Whereas Holly, pretty much 2.0 was the special one today on 400 shares in, 400 shares out, posting a respective gain of 235, and 1.0, 5 signals down 85 bucks. And you might notice this one says aggressive, this one says moderate, this one says aggressive. And that's because, we'll want to go over this real quick here since we've got a larger majority of new people in the room as well. The AI has 3 risk models, or 3 risk modes, I should say. We have conservative profit, moderate profit, and then aggressive profit. And you'll notice up here on the all trades plotter where we can see all of the AI trades today, we've got the conservative column, moderate, and over here, aggressive. Now, real quick here, just to summarize what's going on in conservative profit mode. Well, that's the AI adhering to all of its criteria, all of its risk parameters, risk management, I should say. Just like you or I would when we enter a trade, we know, well, if we're wrong and it doesn't do what we think it's going to do, this is our stop loss. We're going to stick to it. We might also install a profit target. Okay, so that's the same with the AI, profit target, stop loss. Also a timed hold attached to each one of these trades, and we can always see what the timed hold is from each strategy by consulting the strategy panel down here at the bottom. And we can see breakout is designed to hold not all day, but about 15 minutes until the close, whereas sunrise movers is a 30-minute hold time, nickelback is a 2-hour hold time, so forth and so on. So you can always get that information from the strategy panel. So we got stop loss, profit target, and timed hold. And then we also have 2 other reasons why the AI will close a trade out in conservative mode. You'll notice over here, profit save, okay? That's one of the audibles it can call to close a trade out early before one of those other factors plays out, stop loss, profit target, or timed hold. One that you don't see on here today that didn't make an appearance is reduce risk. So you can see today was a pretty busy stop out day. What do we have here? 1, 2, 3, 4, 5, 6, and 7 stop outs out of 15. And Andy, I've got to say, that's probably the highest ratio. That's almost just under a 50% ratio of trades being stopped out, which typically it's maybe 1 or 2 of 10. But due to market conditions, things happen. So usually in the Holly highlights reel, so to speak, I typically like to focus on conservative and moderate profit mode, and then looking at the ones that have a spread between conservative and moderate profit mode. But those are few and far between these days. But there are other things that we can pay attention to regarding the AI and trades that it's in. Whether they're winning or losing is beside the point. So we're going to talk about this one first because this one does fit the classic definition of taking a little bit more risk. And, even though Holly kind of knocked it out of the park on this one, we had a target hit today. So here we go on the 15-minute chart here. This is pre-market area right here. This is the first tick on the 15 minutes into the open. A nice buy signal right here at 30 and 36. And hey, the type of trade that everybody hopes and dreams of on a daily basis. Immediate gratification. It's always fun when it happens. But most of the time, they don't do this. They'll ebb and flow around the entry line, maybe go down there and test a little bit of the stop area before they go, but not this guy. Just right off to the races. Target was hit in the following 15-minute candle. So we still have to consider a target hit, conservative profit mode, and moderate mode is showing us what would have happened if we would have kept the trade open. Now, I will say this about moderate mode. If a stop is hit, it gets frozen, okay? And it doesn't continue to update if a stop is hit. So if we would have held this one, if we would have ignored the AI's profit target, if we were in this one manually with the AI, we could have done a little bit better on the first push. However, would have had to set this little pullback here, all right? But in the end, this total right here is reflective of where the stock closed, which appears to be, hold on, it's not giving me my candle data there. We closed at 31.98, okay? So had you ignored Holly's profit target and stuck with your original stop loss, or in this one, it's a really nice one because you could have used a break-even stop and said, you know what, worst I'm gonna do here is break even, would have kept you in it all day, would have had to sit a little bit of activity here, but in the end, a $248 spread in between 400 and 648 bucks. So that is the name of the game, watching for the AI's exit signal, and then based on your chart reading capabilities, going, you know what, I agree with the AI, or you know what, I think there might be a little bit more meat left on the bone here, and so I'm going to ignore the AI's exit signal, and that's how we can capture some of the spread between conservative and moderate profit mode there. Now you'll notice here, not really a lot of spread in this little stock right here, or this little trade that was triggered very much towards the close. Power hour short hasn't been making an appearance in the mix down here, but it did today. Spit out a nice little trade and go about 15 minutes before the close, or 45 minutes before the close, I should say, and had a nice little profit in it. But once again, if we would have ignored the exit signal, held it for a little bit longer, which we only had 4 minutes left in the day, could have eked out another 30 bucks, the difference between 81.50. You'll notice all the spread kind of disappears here between risk on and risk off. But having said that, let's take a look at some of the stop outs here. And I think I was even talking about this one, Andy, in the live support session today, this sale. Boy, talk about a top tick here. Holly calls the buy at 17.22, and it wasn't immediate, okay, but enjoyed a little bit of upside here. And then in the next 15-minute candle, we're underwater, all right? We come all the way down here, just tempting the stop area, which, what do we have there, 1653? Yeah, you can barely see the red line. I'll just go ahead and push this line up to it, okay? So eventually the stop did get us in the money just a smidge, and then slowly a downturn to the stop area. But always say this, when you see Holly getting stopped out of a trade or closing a trade, if you're not in it already, a lot of the times it can be a decent entry signal watching the AI exit. It's like Andy and Steve and I always used to talk about trading in a trading office. We'd hear somebody bitching and moaning about just, you know, they might be just about to get stopped out or they got stopped out. We pull it up and we go, well, now it looks good, okay? And I can take less risk. So notice what happens at this stop area. Sometimes they act as pivot points, right? So we come down here, we get stopped out, and we just kind of take this sideways motion here, establishing this nice little 1, 2, 3, 4, 5, about an hour and a half of consolidation right in this area right here. So we see it wick, we see a lower wick here, and we see it tighten back up. Once you see this start to occur right around that stop area, well, you know, it wouldn't have been such a hard stretch to go, you know what, going to use this as my stop. Hopes it's going to grab was the case here, and this is what we call a trade around. Trade didn't work, but that doesn't necessarily mean that you might, you know, you won't be able to profit from it. All right. The only reason you would be aware of it is if you participated in it, or which ensued. At the times, different ways to, you know, filter the AI and the data that it's showing you, because the statistical probability attached to each and every one of these signals, it's still good for the day. Even though a stop out might occur, the statistical probability remains viable for the remainder of the session. So a decent trade around opportunity in sale today. And I do believe TCMD, kind of the same song and dance here. Okay, so TCMD, buy signal right here, get a little sideways action for a while, and man, it's uncanny. Just like the other one, comes down here and barely gets you with a stop out. Notice what it does immediately after that. Puts in the wick right at the stop. This candle opens up. So if you're paying attention, anywhere in this following 15-minute candle here, you could have been like, okay, well, it stopped out barely. It's heading back up here. You get a much better price than the AI right here or anywhere through here. Use right outside of that stop. You're going to be risking less. You got a better price. Then you get the biggest move of the day in the TCMD. Steve always likes, his favorite saying is sometimes it's the second mouse that gets the cheese, and a trade like this along with the sale perfectly illustrate that saying. Yep, got stopped out on the first one, take a second stab at it, that's when it goes. So just keep that in mind moving forward. Also too, if you are a premium subscriber and you are a full-blown Brokerage Plus user and you have the ability to automate strategies, that is even an option in AI automation. Is, okay, I'm going to use this strategy today in automation. I'm also going to activate second entries, in which case you would have been in both of these second entries as they come back through the entry line on TCMD. Not quite sale, because that was more of a play in hopes that you get back up to the entry line, whereas TCMD, same stop, same bounce off the stop area. So, very possible to have made a couple entries here right off that wick on the stop, using that level once again as your stop loss. And then once again, as we hit the entry line for the second time and get a pretty nice lift there. So, shortage of conservative and moderate spreads in this market, Andy, but the trade arounds are always going to be there. It's just a matter of, paying attention, being diligent, and looking at these things as the AI either gets stopped out or calls its premature exits in the form of profit save or reduce risk.
Yep. Very good, Jamie. I appreciate it, buddy.
No problem. I will kick it back over to you here.
All right. All right. Been answering some questions here. See if I need to show anybody. I think. Okay, I answered for Jeremy. You're correct. The way you added up Jamie's P&L there, it was based on his settings. If you look over here in the AI and the channel, when they what we do over here is just, and you can see that would have performed better. But
yeah, and Andy, I could have could have shown my moderate profit. On my moderate profit, based on my scale in size of $100 per trade risk, moderate profit finished $224 on the green side, because even though these stop outs occurred, the big winner ate up a lot of that on
that's right,
on WPM. So yeah, moderate profit. If you were just letting everything run, you were still green on the day.
Okay. Thanks, Jamie. All right, guys. So what I was mentioning earlier about trying to get people in, because I know if we do not snap back and get into the nice little bull market that we've spent in the last 12 years, I'm thinking, trading can be very difficult. We could be forming a bottom for very long. I mean, sometimes for 2 years, and it can be, it can be very frustrating. That's why when Steve and I used to have our little business called Today Trader, and we developed this style called swing scalping. And basically what that means is kind of a breed between, it's a hybrid between, day trading and swing trading. Okay, because you're only holding a trade, you look for a setup and you only maybe hold it for 2 or 3 days and you're out. I mean, you get enough moves in this volatility where you can, bang out some good profits. But if we do get in, like I said, into that bottom basing pattern that can last sometimes for a couple of years, yeah, it could be tough if you're just trying to buy and hold on for months or whatever. It can be very frustrating. Day trading, if you're good at day trading, can still be very profitable. But if you're a longer term trading, sometimes you have to cut your time frame, your average time hold down. And I love the fact swing scalping, I call it, because let's face it, a lot of times you can see a good setup and you may have an idea of what the price is going to do over the next couple of days. But after that, nobody has any idea. Anybody that tells you they know where a stock's going to be 2 or 3 weeks from now, like I always say, they're trying to sell you something. So anyway, I'm going to give you some ideas, more ideas on fading, because I think this is where you can really do well, and when you get in these markets, if we get into one, which is very good chance we will. And one of the things I like to do is just build a simple alert that will help me find stocks that may be coming to critical areas. This one is one right here, and I'll share it with you. It's called the 50 and 200 SMA alert. And it's very simple. If I look at the configuration, okay, I have under alerts, I'm just looking for stocks that are crossing above and below the 200, and I'm looking for stocks crossing above the 50 and below the 50 period moving average. Now, if there's no momentum in the, if we're in a raging bull market, maybe if something's crossing above the 50 and it hasn't moved too far to get there, it may be a good buy. But I would rather use this and as more of I'm looking for stocks to fade when they're hitting these levels. Okay, let's take a look at the filters here. There's not a lot. Stock has to be over $5 and it has to have an average volume of 500,000 shares a day. And I believe that's it. Nope. Well, there's an EPS hack. Just taking out, making sure I don't get ETFs in here. And I do have a market cap in there. It looks like 300. I'm sorry. It looks like 3 million. Is that what that is? 3 billion. That's 3 billion. All right. So I could change that. Let's do that. Let's go ahead and change this. Let's bring it. Let's just take it out. I'm going to take it out for now, see if we get more data. All right, and we're going to run a history on that, and we're going to see what's coming through here. Now remember, this is only alerting us when something's crossing above those key moving averages. Taking a little bit of time to load. All right, that's it. These are all the stocks that came through here today. Let me expand this a little bit, and let me go ahead and make my daily chart big again, so we can take a look at this. All right, so let's take a look. Just start from the bottom here. Abbott, this came out early this morning. I don't know why I don't have a time, but we'll be able to see the arrow on this. Was early this morning, and this was crossing below its 200-day. First of all, I probably would not look at this early in the morning. This is the kind of stuff I'm looking for, because so this PEP right here is crossing above its 50-day moving average right here. Okay, but so look what's happening. This is what I'm looking for. Okay, I'm looking for moving averages. I'm looking for congestion, just like I showed you there on the SPY chart. So if I take my horizontal line here, oh, wrong one. Horizontal. And I just kind of marry it up to where it's currently trading at. You're going to see in this PEP, it's got some nice little congestion right here. Even right here, this 200-day moving average, where it ran up today and it keeps hitting there and backing off. This is one where I would maybe keep an eye on to look to fade. Okay, look at the bounce it has. I don't want to be shorting it down here. Okay, you're going to get, that's where you get these snapback pops. I would rather fade it. Now, when I fade these things, I do it with small size, especially in this kind of volatility, because you can see the ranges that it has. You don't have to have a lot to make some decent money on something like this. So that would be interesting. You know, I don't know. I don't know about some of these electrical power companies, but there's one that today ran right into its 250 and then backed off. See if I can find. There's Abbott again. Okay, there's another one. Look at these 3 wicks up here. Okay, it is being met, Colgate-Palmolive, with sellers. Every time it runs up to the 7150 area, it gets met with sellers and pushes it back down. This is one that may be going to retrace lately. I don't really like that. I don't really have any sort of pivot levels. It's kind of a mess. I would probably leave something like that alone. But I'm just trying to give you guys an idea of, and this book will become populated more with more charts, especially if we have another up move on Monday. But I just kind of want to give you guys an idea of what to look for. There's that SO again, which you know, once again, look at all this congestion over here that it's running into. It's beautiful, right there, and ran into the moving averages. This congestion had a little head fake, snap back down. This one could look to sell off on Monday. I don't know. I'll be keeping an eye on it. We could set some alerts, which we're going to do later. I just want to hand you this so you can get an idea. I particularly don't like the stocks I'm seeing in here. I'm seeing a lot of these power generation companies, and I don't trade those because they trade like almost like treasuries, because most of them pay a yield. So it's kind of quirky trading those. So I'm looking for better names that I'm familiar with. But I'm still going to share this with you. Let me go ahead and put this back on real time, and I will save and share this too. All right, and what I'm going to do is drop it in the chat window. And I'll just call it 50, 50, 200. All right, so those of you guys who have the software have access to that cloud, and you can pull up this alert. So it's in the chat window, once again, of your GoToWebinar interface. Yes, I dropped it in there, Mark. All right, so now real quickly, we're gonna build one real quickly. All right, we're gonna build an alert and just kind of show you kind of, and a lot of times when the market is volatile like this, I will have to like rebuild these every day because I want to use different parameters, and I'm looking for, you know, certain parameters that may be exhibiting big ranges. Okay, if the market tightens up over a course, I would have to go back in and lower down those parameters. So it'll become more clear once we start building this thing. So let's just build a new A window. Okay. Start from scratch. And what we're looking for here, what we're going to be looking for is just a new high, because we're going to be looking for stocks that are hitting a new high. All right. But the key thing is going to be the filters that we add. Okay. Because what I want to do, I want to find stocks that are hitting a new high. I want them to have had a nice move over the last 20 days. Okay. I want them to be kind of in a certain month range, like a 3-month range. I want them in the kind of upper portion of that 3-month range. But I don't want them super strong, so I'm going to use a position in year range to prevent looking for stocks that are, you know, about to break out of 52-week highs to short. I'm not sure I want to do that. I'm looking for stocks that may be running into just kind of like what I just showed you. So let's first build our parameters. First thing we're going to do is we're going to put stocks over $5. Okay, and we are going to put average daily volume of 500,000, 500,000, and position in 20-day range. Okay, here's what I'm going to do. Every range has a range, guys, of, first of all, it doesn't include today. It's looking at the past 20 days. Okay, the low end of that range is 0 over the last 20 days. The high end of that range is 100. So I'm going to come in here and put a minimum of 100. So I want it above its last 20 days. I want it trading above that. So if I click on my show me button here, you're going to see the price is at least 100% above the low end of this range. Okay, which means basically it's above the high end of that range. All right, position in 3-month range. All right, so here's what I want to do. I'm going to come in here and put 60. Okay, and once again, it's going to say that these are new ranges, so I'm not getting the detail on that, but never mind that. I'll just explain it to you. Just like that position in 20-day range is position in 3-month range, it has to be in the upper 40% of its 3-month range. In other words, I don't want to be shorting things that I want things to have had a nice move, and I'm looking to fade them. But I don't want them too strong, so I'm going to come in here and position in year range. I'm going to put 80 as a max. Okay, so we know now that the price is no more than 80% above the low end of the range. Very simple. Okay, we're building an alert, and we're going to be alerted to stocks that are hitting a new high, and all these parameters have to be met. Let's build some columns real quick. Time, symbol, price. Let's throw in some relative volume here. I don't want to find stocks that are hitting highs on really strong relative volume. I don't want to jump in front of a freight train. Show column. Let's do change in 20 days. I think that would be a good one. We want stocks. We know they're going to be at the high of their 20-day range, but I want to know how much they've moved over the last 20 days. Simple little column like a change in 20 days. Percentage, and we're going to show column. And we don't need a whole lot of detail in this, because basically what we're doing is we are going to discretionary trade these, and we are going to basically just use our eyeball on the chart, man and machine, and we're going to decide if we want to. And we're actually going to put some alerts in. I'm going to put some alerts in, and we're going to share them with you. So we're just going to call summary on this one. I'm not sure what to call it. Let's see. Let's say, let's just call it fade me. All right, we just launched an alert. And let's see the stocks that have come through today. Okay, we got quite a few. And what we're going to be looking for, okay, that's kind of what I'm looking for. Okay, I'm looking for stocks who's had a big move from the lower part to big. Now, I am not dumb. Okay, I got this one right here. Like I said, it's moved all above its moving averages. It does have some resistance coming, but this is more of a move than what I want. Okay, and plus this is some sort of credit bureau. I have no idea. This may be something that's going to benefit from this coronavirus thing that we've been experiencing. So I must stay away from that. Medtronic. Okay, there you go. This is the kind of stuff I'm talking about. Okay, look what it's doing. It's running in right into resistance. Okay, even though it's above the moving averages, I'm okay with that. Okay, but look what we have over here. So what I'm going to do is I'm going to make because we got resistance coming up right here. So I am going to create a price alert, and it's going to be defaulted to long, but I'm going to put it to short. Okay. There we have it. Okay. So if this stock runs up on Monday and triggers this, I know it's running into major resistance, and I may look to fade that. We're going to do a few more here. I kind of went through this earlier, and let me see here.
Hey, and Andy, while you got a little moment here,
Sure.
One of the attendees was asking, well, if we pointed this to the TSX, the Canadian exchanges, how would it look? And I'm going to guess it probably wouldn't look very good, but maybe we can run that little experiment here in a second, just see what it looks like.
Okay, sure. Yeah, we sure will. Let me go through here and find the stocks. Well, I tell you what, I'm running short on time. So luckily I jotted some of these down. So we're just going to kind of go through them here, and One of them was Switchfoot. Okay. And this one, like I said, this, you know what, once again, it had a bigger move than what I want. I do see some major resistance right here, but like I said, this one has had a bigger move than what I want to get in front of. All right, CVFB or CVBF. And trust me, when I share this with you guys, you can go back and find all these. See, this one right here is running right into its 200-day moving average, okay? Commercial banking, boy, this is one I would, I'd probably put a one below, because if it gets to that 200-day, it's probably going to run into some major levels right here, but I don't know if this is too strong. As a matter of fact, I'm going to leave that one alone too. It's just, when I see too much strength like that, I'm just going to back away. Edward Science, this one is a good one right here, all right, because it's running right into its 200-day moving average. It's gone from 160 going all the way up here to 220. Got some congestion right over here and a gap fill right here. So let's just put a little create price alert, and I'm gonna throw a short in right there. And if that triggers, I may put in, depending on what the market's doing, I may put in a little short right there. And I know it's contrarian to what a lot of you guys have, maybe used to trading strength long, but in this environment, if you can put on small size, and what I'm saying is when you take these, you put on real small size. I put on like about a quarter of what I normally would trade, okay? If it starts going in my favor, I can always add to it, okay? But I want to give myself a little wiggle and jiggle, and I'm not going to tell you where to put your stops, okay? That's subjective, okay? You may be real tiny size and you're looking, you may want to put your at 240. Some people may want to put it at 230, but I'm just going to give you some ideas and you guys can decide. All right, CVLT is another one I found on that. And look here, we got congestion coming up. I'm going to put a price alert right there. And if it runs up to that one, I may look to fade that. Okay. AMCR. Oh boy, you know what? I'm gonna leave that one alone. CME. All right, we have CME here. We got a gap fill right here, and also kind of marries up with some of these. So I'm just gonna kind of put it right here at this gap fill. And guys, this is where you can, if you get a trigger, you can kind of watch the stock and watch it on the intraday, and maybe don't just jump in front of the momentum if it's going real strong. Maybe you watch the intraday and look for a bar reversal on a 15-minute chart. There's ways to engage. You don't want to just go in with reckless abandon and start shorting a bunch of stuff if the market's going against you. But these can be great levels. I mean, it's some people would call this counter, intuitive, and it very much is. Here's McDonald's. What's happening here? You got a gap fill and you got the 50-day moving average, and along with some resistance going back over here. So let's just put it right at this gap fill, and maybe we short that at that level. And the last one is Illuminati. And right here, you got major resistance. Was support, broke it, and so we're gonna throw it some right out in there. Short, boom. There you go. You can see the resistance there. It's major. If it runs up to that level, once it's hit, I mean, don't feel like, that's why you set price alerts. You don't have to throw offers out. Okay, you set price alerts, you gauge it, and then maybe you can get a quick short off on a reversal. All right, so let me share these. I'm going to share all these price alerts with you. And then, okay, there's only about 6 of them. So I'm going to highlight them.
Andy, were you going to drop the fade me strategy in there as well?
I am. Okay. I sure will. Copy all. Let's do the price alerts first so you guys can have those. All right, and then I will come in here. Let me put it on real time. And I will share this as well. It seems kind of unorthodox, but I tell you, Jamie, we've been trading an account and doing very, very well. And some of my best trades have been on unorthodox trades going against the grain. And it doesn't take huge size. You know, you can, if it reverses, you can get some, you know, in a couple of days, get some really good moves. All right, so fade me. All right, I'm dropping that in the chat window right now. And we can do what you wanted to do, Jamie. Yeah, you're going to see some missing data if we run the TSX, the two
Right.
Toronto exchanges. But anyway, we can take a look at it. And I don't even know if any is going to be meeting these parameters. What will happen if you are using the Toronto exchange is you're going to see, you'll see the alert and the time in real time. So the alert does work. The problem is you'll be missing things like volume and price, and but it's okay. I mean, you can always, if you're hooked up to a broker, which you have to be if you want to trade, because we're not a broker, and you are linked, you just click on the alert as it comes through. And because I'm not seeing any that came through this today.
Yeah, when you try to
Oh,
apply
by
a
the
lot of
way,
these scans to the Toronto, they don't work, or they just don't trigger.
yep, yeah. And one that I faded today near the close was this TSG, and it was off this alert. So I know it's above all its moving averages, but I like the congestion over here and congestion right here. So anyway, all right, guys, we filled up a whole hour. You know what? Nothing for long right now. You know, in this kind of market, I have plenty of alerts for longs, but I am not looking to go long. I mean, I came in long today, and luckily I had some oil stocks and sold them at the right time because they fell apart. But I look for pullbacks. Now, I'm not day trading. I'm swing trading. So if you're a day trader, that's different. You can obviously go long and trade momentum, but I just don't have anything in the agenda for today for longs. Maybe next week. Maybe get a pullback next week, and then we'll come in looking for long stuff next week. All right, guys, listen, thank you, man. Great crowd, and thank you so much. Happy Easter to everyone. Have a good 3-day weekend. I'm going to bring in Scott, and he is going to walk us out. Hey, you guys hang on, because he's going to have a nice coupon for you to get the software and at a great rate, and then play with it over the weekend.
Yeah, that's right. Thank you, Andy. A couple things. We have daily support sessions. Starts at 12 p.m. Eastern, 9 a.m. Pacific time. Just go to our YouTube channel. The easiest way to get there is trade-ideas.com/live. Go there and ask any questions you want during live market hours. We also rebroadcast portions of our trading room there that you can catch there before you even join the trading room. It's free. You don't even have to be registered to join it. We have a new ebook that's out. It was written by our chief information officer, who is the guy that created the odds maker and our AI, all that kind of stuff. You can find it at trade-ideas.com/earnings. He's got some great ideas about how to manage earnings season to your advantage. So check it out. It's also got some cloud links for you to import into your layout. We got a podcast that we release intermittently. We've got a couple out this year already that have some interviews, so do check those out. We'll be releasing some more in the weeks or months ahead. Just search for Trade Ideas Podcast wherever you listen to your podcast. Add us as a subscription. You'll be ready to catch the next one, and you can check out the archives. There's a code that's good all month, Spring Holly, for 15% off your first month or year of Trade Ideas. And here's a tip. You could also try Easter egg all caps for 25% off during the Easter holiday weekend. If you're on our mailing list, you've already gotten that information. So do check it out. You can also use either of those to upgrade from standard to premium. You can follow Jamie on Twitter at QuantBot. You can also follow Steve Gomez at Today Trader. You can also follow at Trade Ideas. Trade Ideas Pro is the Facebook handle to like and follow everything that we post and share it with your friends. And if you have any questions about anything, or if you missed a scan and you want a link, email info@trade-ideas.com. That goes to our help desk, and we will help you right out. Thanks, everyone. Have a good one. Bye.
Thanks, everybody. Happy Easter.
Happy Easter. Bye-bye.